Hey everyone, it is Julie here with TipRanks. Today we're taking a look at 3 dividend stocks with high yields and a cheap price. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 high-yield dividend stocks that are all priced under $20 per share. We're going to take a look at these companies, what it is that they do, and of course how Wall Street weighs in on the stocks as well. We found these companies using the TipRanks Best High-Yield Dividend Stocks page. This is found right under the dividend menu, and it not only shows us stocks with high yields, but also a high SMART score, which looks at the stock's likelihood to outperform the overall market. We sorted here by analyst consensus to get some strong buy ones at the top. Just before we get into today's stocks, this is a friendly reminder that if you enjoy the video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to download the TipRanks mobile app so you can access all of your favorite investment research tools on the go. Links are in the description down below. Now let's get right into our 3 high-yield dividend stocks. First on the list, we're taking a look at LADR Capital. They trade under the ticker LADR, currently priced at $11.59. Their stock has climbed 15% over the past year, and in the last 3 months has gained 12.5%. They score a 9 out of 10 on the TipRanks Smart Score. LADR Capital is a REIT, or Real Estate Investment Trust, and they've built up a portfolio worth about $5.5 billion. They've built their business on a differentiated set of investments, primarily engaging in senior first mortgage and floating rate loan origination collateralized by commercial real estate assets. The company also includes ownership and operation of commercial real estate in its activities, in addition to investments in investment-grade securities backed by first mortgage loans or commercial real estate. They've been in business since 2008 and have securitized or sold $17.3 billion in loans since their inception. As a REIT, there are parameters to how much of the company's net income must be distributed to shareholders, which is why REITs are typically known for their high yields. LADR's current quarterly dividend comes in at 23 cents per share for a dividend yield of 8.06%. Their last ex-dividend date was at the end of June for payment on July 15th. They'll be sharing their Q2 earnings report in just a couple of weeks on July 25th, and this does follow a strong first quarter back at the end of April. For their first quarter, they reported earnings per share of 33 cents, beating estimates by 4 cents per share and continuing a solid track record of earning beats. Distributable earnings was $42.3 million, and the company said that they're well positioned going forward with $1.5 billion of total liquidity and 1.4 times dividend coverage. This is covered by a stable base of net interest income and real estate NOI. And they also increased their share buyback authorization by $75 million. Following that earnings report, we did have one analyst from B. Riley Financial increase their price target. They said the company reported strong Q1 results and they see minimal downside risk to the book given LADR's portfolio's credit quality and cash cushion, with the buyback being re-upped to $75 million. There are 4 current analyst ratings on the LADR Capital stock, and it does come in as a unanimous strong buy. Analysts' average price target comes in at $12.75 for an upside potential of 10% from current prices. And you can see here our price targets are pretty closely grouped together. Our low-end price target are a couple at $12.50 for an upside just shy of 8%, and 2 high-end price targets at $13 for an upside of over 12%. Second on our list today is a company called GeoPark. Trading under the ticker GPRK, they're currently priced at $10.77. In the past year, their stock has climbed 16%, and in the last 3 months has grown 11%. They score at 9 out of 10 on the TipRanks Smart Score. GeoPark is an oil and gas company operating in Latin America. Founded back in 2002 out of Colombia, GeoPark's assets include working interests in over 700,000 acres of hydrocarbon blocks across land and offshore in Chile, Colombia, Brazil, Ecuador, and Argentina. They are a leading oil and gas finder with a drilling success rate of 81% from 2006 to 2023 and a low-cost operator with about 90% of their production being cash flow positive. The company has just been paying a dividend since 2019, but they have been growing it pretty aggressively. From just 2 cents semi-annually back in 2021, the dividend has now grown to 15 cents per share on a quarterly basis for a dividend yield of 5.17% and a low payout ratio at just 26.7%. Their last ex-dividend date was May 31st with a payment on June 14th. GeoPark shared their Q1 earnings report back in mid-May. Now, they did fall short of estimates for both earnings and revenue, but did see some big year-over-year growth. For their first quarter, they reported earnings per share of 55 cents. Now that did fall 4 cents short of expectations, but did grow 20% year over year. The company had strong cash flow generation and delivered $111.5 million in adjusted EBITDA with a $30.2 million net profit that was 15% higher than the previous year. GeoPark's CEO noted that the company delivered robust financial results for their first quarter and noted a recently announced acquisition that would create immediate inventory of quality drilling opportunities in one of the most productive oil and gas basins in the world. He said they're making steady progress towards the promised step change in their underlying performance and growth path. With 2 analysts upgrading their ratings on the stock in the last few months, we have 4 ratings altogether and another unanimous strong buy. The average price target comes in at $14.67 for an upside potential of nearly 36% from current prices. Our most recent rating is an upgrade from Bradesco at $17 for an upside of 57%. Our low-end price target is back in April here with an upside of 16%. If you've made it to our third stock today, this is your reminder to make sure you hit that thumbs up button. For our third dividend stock, we have another REIT with Rithm Capital. Trading under the ticker RITM, they're priced at $11.03 per share. They've climbed nearly 29% over the past year, gaining 6.4% over the last 3 months. They also score a 9 out of 10 on the TipRanks Smart Score. Rithm Capital provides capital and services to both the real estate and financial services industries. They invest in a wide range of assets, including residential mortgage loans, consumer loans, business purpose loans, and mortgage servicing rights, and they also invest directly in commercial real estate and single-family rental homes. The company has $42 billion in assets and $7 billion in total equity, and their investment strategy is designed to perform across changing market conditions. Since their inception, Rithm Capital has paid out $5.3 billion in dividends, and their current quarterly dividend sits at 25 cents per share for a dividend yield of 9.44%. Their last ex-dividend date was just on July 1st for a payment date of July 26th. They did come out with a solid earnings beat in their first quarter at the end of April, where they reported earnings per share of 48 cents, coming in 9 cents ahead of analyst expectations and growing 37% year over year. The company saw net income of $261.6 million and had earnings available for distribution of $233.2 million. Following that last earnings report, we had quite a few analysts increasing their price targets. That included one analyst from B. Riley Financial. They said that the company reported another strong quarter and their outlook for growth remains one of the highest in the sector, especially in a higher for longer rate environment. Another analyst from Argus Research also raised their price target, saying that the company has transformed its business model since the financing crisis in late March 2020, and that they continue to grow their mortgage servicing business while also taking advantage of new debt-related investment opportunities. Rithm Capital has 7 current analyst ratings, coming in as a strong buy with 6 buys and 1 hold. And the average price target comes in at $13.07, implying an upside potential of 18.5% from current prices. Down below, you can see a bunch of these analysts increasing their price targets. On the low end, we do have our hold here, still with an upside of over 13%, and our high-end price target does come from B. Riley Financial with an upside of nearly 27%. So there we have 3 high-yield dividend stocks, all priced under $20 per share, all with a strong buy consensus and scoring an outperform on the TipRanks Smart Score. Let me know your thoughts on these stocks in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're sticking to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.